My name's Darren Carlett, and I am the managing director of SpreadEdge Capital. And SpreadEdge publishes two newsletters, the Strangle newsletter, which is about stocks and options, and the SpreadEdge newsletter, which is about seasonal spread trading. This video is about the Strangle newsletter, and it's a high-level overview of the strategy. There are 4 other videos on my YouTube channel that go into a great amount of detail on the strategy and have over 3.5 hours worth of content. In terms of the strategy overview, this strategy entails buying a stock and selling both a covered call and a cash secured put at out-of-the-money strikes. And the goal is to earn option premium while maintaining controlled stock risk. So it's important to understand that this is a combination of 3 strategies rolled into a single position. You know, it's the long stock, it is the covered call, and then the cash secured put. And the purpose of this strategy is to earn income by selling premium on both sides of the stock price. To construct the trade, you start off by buying 100 shares of stock or in 100 share increments. We're then going to sell a call above, generally about 1.5 to 2%, and a put below, about the same 1.5 to 2%. The benefits of this strategy: first is rock solid stock picks. The trades have a documented 76% profit rate since inception. They also have a proven investment strategy with returns that are 2.4 times the S&P 500. It does offer various variations to the strategy that helps to fit other risk tolerance profiles, and it's a very low maintenance strategy. This isn't a day trading strategy or something that requires a lot of your time. You're going to place the trades on Monday and not do anything else with them until the next Monday. Okay, the core elements. Number 1 is to pick quality stocks, and we have reviewed how we're looking for technically strong stocks using time-tested search engines that have criteria to ensure that the options meet our investment strategy. We are sellers of stock options, which gives us the obligation to sell a call if it hits a certain price, and the obligation to buy if it hits a certain price. The setup is buying 100 shares of stock, selling a call above and a put below. And generally, that's going to be in the 1.5 to 2% above and below is what we're looking for. We are using a weekly option cycle. And this is different than a lot of covered call strategies, but we're going to go have a 1/4 of our investment capital in on each individual cycle. We do have an element of looking at the market environment and backing off on our investment level in markets that aren't favorable. And then diversification is a key element across sectors, but also stock price and implied volatility. There has been a lot of research completed on the profitability of option buyers versus option sellers. And here is a very high-level overview of some of the studies that have been completed. For option buyers, the typical goal is a high reward on a directional move, and the profit source is big moves in price, but their win rate is only between 30 and 40%. So the average profit or loss is small gains or losses most of the time, with the occasional large win. For option sellers, the typical goal is to collect premium and profit from time decay. The profit source is price stability in time decay, and the win rate is pretty staggering at between 60 and 75% of the time. And the average profit or loss is small, consistent gains with the occasional large loss. To illustrate the dynamics that were reviewed on the previous slide on buying options versus selling options, I want to kind of go over the actual performance in my personal account, which is since inception in February of 2024 through the end of July of 2025. Now, as you can see on top here, top left, The winning trades are have a gain percent of about 13%, but a losing margin of a little over 18%. But in total, average over 4% per trade. And the way that the numbers work is that the number of winners to losers ratio is 2.76. So we do have larger losses, but we have significantly more winners than losers. When you compare the performance of the covered call naked put strategy compared to the S&P 500, it's currently running at about 75% versus almost 28%. So this is well over the 2.4% that I mentioned in the benefits slide. Bottom left, you can see kind of the profit over time. You do have some big losses occasionally, but there again, the number of winners dwarfs the number of losers. And of course, on the bottom right then is a chart of the performance over time. And you can see there's been quite a bit of separation in the last several months, which is directly related to the stock picking, which I'll review in just a moment. Of course, another big factor that's causing this divergence, positive divergence, is the weekly option expiration cycle that I mentioned earlier. That began literally in that October timeframe. The stock picking is what I believe is the cornerstone of this strategy. And each week I start off with a stock and ETF search screen. And I have a variety of screens that I use. I think there's a total of 17. And bottom line is I'm looking for a variety of stock and ETFs that have positive technical reasons to be traded. And I add to those searches the criteria here on the right, which ensures that we're not reporting earnings, that it's got enough open interest. The stock price, of course, is very important to keep it in a tight range there so that we don't get $200, $300 stocks, which of course we couldn't afford to trade, and that have a sufficient enough implied volatility. But the bottom line is we're looking for strong technical stocks that have lots of current support underneath them. The Bull Strangle newsletter is published every weekend and contains these 4 sections. First is a market recap, which goes through the weekly market action, an economic calendar, a technical analysis of the S&P, and a market sector summary. Next is an open trade update, which shows all the current holdings and a diversification summary, has the open trade profit and loss, and charts, 2-hour charts for all open trades. Next is what I believe is the most important part of the newsletter, which is the watch list. There are 20 watch list candidates published every week that has a variety of information needed for you to make the best picks for the next trading day. And then finally is the performance summary, which has all recently closed trades, the performance of the different variations compared to the S&P, the watch list performance from the most recently closed expiration cycle, and then a historical tracking of the watch list metrics. So that's the strategy overview. As I mentioned, you can go to my YouTube channel, SpreadEdge Capital, and view 4 other videos that go into this strategy in significant detail. I do offer 2 different, very different newsletters to subscribers. If you buy one, you get the other one for free. So one price gets you both newsletters. Of course, this whole video has been over the Bull Strangle strategy, which is the stock and option strategy, but I also have a commodity futures newsletter, which specializes in seasonal spreads. You can get both newsletters for the low monthly price of $49, and I offer deep discounts for 3-month, 6-month, and annual subscriptions. The annual subscription actually is a 35% discount. And for a limited time, you can get your first month for just $1. So you can try before you buy.